All right, let's unpack this. Have you ever considered the profound expertise required to guide someone through perhaps the largest financial decision of their life, say buying a home? Or perhaps you're simply intrigued by the intricate regulatory and operational machinery that underpins the UK financial system, ensuring it functions securely and, well, fairly. Today, we're embarking on a truly insightful deep dive, drawing from the comprehensive knowledge of Mr. G, a highly respected CeMAP tutor. His complete CeMAP 1 revision script is far more than just a study aid. It's a meticulously crafted blueprint for understanding the legal, ethical, and practical bedrock upon which a trusted financial professional, particularly a mortgage advisor, builds their career in the UK.
Indeed. What becomes immediately clear from this material is that this isn't merely about, rote memorization to pass an exam. Not at all. Instead, Mr. G presents a holistic view of the entire ecosystem a financial advisor navigates. This ranges from the broad strokes of high-level regulatory frameworks and government policy right down to the granular daily aspects of client protection and data security. Our mission today is to distill the core insights from this immense body of knowledge, making them invaluable whether you're contemplating a career in finance or you simply wish to be a more informed and empowered consumer of financial services.
So prepare to significantly enhance your understanding of UK finance and the critical role of a mortgage advisor. Along the way, we'll uncover some truly surprising facts and explore practical strategies for navigating this complex landscape. Okay, so Mr. G begins his deep dive by articulating that CeMAP 1 is fundamentally about grasping the underlying mechanics and structure of the UK financial system. It's a remarkably vast and interconnected landscape, encompassing everything from the intricate web of regulations designed to protect consumers like you, to the nitty-gritty details of various financial products, and even the extensive legal responsibilities that come with dispensing financial advice. He meticulously dissects this complex domain into 25 distinct yet interconnected topics. This comprehensive overview is specifically designed to ensure that anyone contemplating entry into this field possesses an unshakable, robust understanding of the environment they'll soon be operating within.
Precisely. And the initial 5 topics he lays out are absolutely critical for establishing that foundational context. We're talking about the overarching UK financial service environment, the profound and often immediate impact of government policy on market conditions, and the pervasive influences stemming from the European Union and the broader global markets. Think of these as the fundamental tectonic plates upon which the entire financial system rests. Without a solid grasp of these underlying forces, the subsequent layers of products, regulations, and advice simply won't make coherent sense. They dictate the very rules of engagement. When we connect this to the bigger picture, these foundational topics are pivotal because they precisely define the playing field for every financial transaction and piece of advice. Understanding this overarching environment means grasping how sweeping economic shifts, perhaps an unexpected recession or a period of rapid inflation alongside significant political decisions, and even intricate international agreements, can directly and tangibly impact the very financial products available to you. Consider, for instance, a government's sudden decision to drastically alter interest rates. This isn't just an abstract macroeconomic policy. It immediately trickles down, affecting the affordability of your mortgage, the returns on your savings accounts, and even the viability of certain investment vehicles. This raises a crucial question that regulators and practitioners constantly grapple with. Given the unprecedented speed of global change, especially in an era marked by rapid technological advancements and unpredictable geopolitical events, how agile and adaptable must financial regulations be to effectively keep pace rather than perpetually playing catch-up?
That's a profound point, and it truly emphasizes the incredibly dynamic nature of this environment. It's easy to overlook how something as seemingly distant as a government's annual budget or a complex international trade agreement can exert a direct influence on your personal finances. But they absolutely do. For example, a budget might introduce new tax incentives specifically for certain types of long-term savings, or conversely, it could increase stamp duty, directly dampening or stimulating the housing market. Similarly, a major global economic event, such as a widespread financial crisis or a global pandemic, doesn't just create headlines. It fundamentally reshapes supply chains, consumer confidence, and investment priorities, all of which directly affect financial products and advice. Just imagine the sheer seismic shift that something like Brexit created for the EU global influences aspect for any financial advisor operating in the UK. Overnight, the regulatory landscape had to adapt in unprecedented ways. New bilateral agreements needed to be forged, and the fundamental terms of cross-border financial services shifted dramatically. For a mortgage advisor, this wasn't just theoretical. It meant rapidly understanding new capital requirements for lenders, updated consumer protection laws that might diverge from previous EU standards, and potentially even changes to the availability or terms offered by certain international lenders who previously operated seamlessly within the EU single market. So it's not merely about possessing academic knowledge, it's about understanding the living, breathing economic and political forces that constantly reshape the very advice they are legally and ethically bound to provide.
Absolutely. Building upon that foundational understanding of the macro environment, the next set of topics, spanning from 6 to 10, delves into the actual tools and instruments of personal finance that individuals interact with daily. This section comprehensively covers financial products in a broad sense, then narrows down to specific savings vehicles, various investment types, the particularly intriguing and often misunderstood concept of tax wrappers, and the crucial area of pensions. These are the tangible instruments that bridge the gap between abstract financial concepts and concrete, tailored solutions for clients.
This is where the material truly becomes tangible and relevant for most of us, because these are precisely the instruments people interact with on a regular basis. Whether your goal is saving for a significant deposit on a home, meticulously planning for a comfortable retirement, or simply aiming to make your hard-earned money work more efficiently for you, you'll inevitably encounter these products. What's genuinely fascinating about tax wrappers is their strategic purpose. They are designed to legally shield income or capital growth from taxation. Take, for example, a stocks and shares ISA in the UK. It permits your investments to grow and generate income without being subject to capital gains tax or income tax on dividends up to a specified annual limit. This makes them an exceptionally powerful tool for long-term financial planning, allowing wealth to compound much more efficiently and rapidly than it would in a standard, fully taxable savings or investment account. The strategic use of such wrappers can dramatically alter an individual's financial trajectory over decades.
This precisely underscores the imperative of not just knowing what a product is, but possessing a deep understanding of how it functions within the broader context of a client's overall financial plan. Critically, this includes appreciating the profound impact of tax implications, which can dramatically alter the net outcomes for an individual. It's one thing to be aware that a pension exists, but it's an entirely different level of understanding to grasp its specific tax relief benefits, the often complex contribution limits, and most importantly, how it strategically interacts with other components of a client's financial picture, such as their current income, their projected retirement needs, and their existing savings. This truly holistic, integrated view is what fundamentally differentiates a merely informed individual from a highly competent and ethical financial professional.
Exactly. This is where you really start to appreciate how these diverse financial products aren't just standalone items, but meticulously integrated components that form a cohesive, comprehensive financial strategy tailored for an individual client. It's not about an advisor simply pushing a single product. It's about skillfully orchestrating a suite of complementary solutions that collectively work towards a client's specific, often nuanced goals. And this, of course, immediately brings ethical considerations to the forefront. For instance, recommending complex, high-risk investment products to someone who demonstrably has a low-risk tolerance or a very limited understanding of market volatility could be incredibly detrimental to their financial well-being. The CeMAP curriculum, by covering these products in such intricate detail, aims to equip advisors with not just the technical knowledge, but the ethical grounding to make suitable recommendations, not just any recommendations that happen to be available or, lucrative for the advisor. To really drive this home, consider the stark difference in application between a simple, easy-access savings account, which prioritizes liquidity and offers minimal risk, and a stocks and shares ISA. The ISA, as we touched on, strategically leverages significant tax benefits for potentially higher growth, though it does come with inherent investment risk. For a client saving for a short-term goal, like an emergency fund or an upcoming holiday, the simple savings account might be the ideal, most practical solution. However, for an individual focused on long-term wealth building, say for retirement or a child's university fund, the ISA as a tax wrapper becomes incredibly powerful because it helps them retain a much larger portion of their investment returns. This profound understanding of both a product's precise mechanics and its strategic placement within a client's holistic financial plan is absolutely foundational to effective and ethical financial advice.
Shifting our focus now, topics 11 through 14 bridge the gap from pure financial instruments to the critical realms of protection and borrowing. This segment comprehensively covers life, health, and general insurance products, explores various forms of lending from personal loans to mortgages, and, critically, returns to the overarching concept of deeply understanding customer needs. What's truly illuminating here is the deliberate pairing of insurance and lending products with the foundational principle of customer needs. This pairing profoundly underscores that these aren't merely standalone financial offerings. They are, at their core, solutions meticulously designed to address specific life events, mitigate unforeseen risks, or fulfill crucial financial requirements. Think about it. An individual doesn't wake up in the morning specifically wanting a mortgage. They desire the security and stability of owning a home. They don't inherently want life insurance. They want to protect their family and ensure their loved ones are financially secure should the unthinkable occur. Therefore, a competent and ethical advisor's primary imperative must be to first deeply understand a client's unique situation, their vulnerabilities, their future aspirations, their current financial capacity, and their underlying motivations before ever recommending a specific product. This demands exceptional active listening skills, profound empathy, and a keen ability to uncover not just stated needs, but often unspoken anxieties and long-term objectives.
It truly is a delicate balance, isn't it? An advisor is constantly weighing how best to meet a customer's immediate need for a loan or insurance, while simultaneously ensuring that the recommended solution is genuinely affordable, sustainable, and most importantly, suitable for their client's long-term well-being. For example, if an advisor were to offer a client a very large mortgage that stretches their budget to its absolute limit, it might secure them the home they desire in the short term. However, it could also expose them to immense financial stress and potential hardship if interest rates unexpectedly rise, or if their income experiences any unforeseen reduction. The responsibility implicit in truly addressing customer needs is absolutely immense. It's about safeguarding their entire financial future, not merely closing a transaction. This ethical imperative permeates every decision. To further illustrate this critical distinction, consider the scenario of a young family needing comprehensive life insurance. Their profound customer need is driven by a deep sense of love and responsibility. They want to ensure their children's education is secured, or their mortgage payments are covered should a parent pass away prematurely. This requires a specific type of product and a highly empathetic approach. Now contrast that with an individual whose customer need is for general insurance for their newly purchased car. While still a valid need, it's primarily driven by legal requirements and asset protection. Both are legitimate customer needs, but they necessitate vastly different product solutions, a different understanding of risk, and a tailored approach to assessing the client's underlying motivation and specific risk profile. This deep understanding of distinct needs is what truly defines good financial advice.
Now we arrive at what can be considered the very backbone, the indispensable skeletal structure of the entire financial services industry: regulation. Topics 15 through 19 meticulously cover different advice areas, fundamental legal concepts that govern transactions, the absolutely crucial and pervasive role of the Financial Conduct Authority, or FCA, in regulation, and the concept of supervision, which ensuring ongoing adherence to rules. This is the intricate framework within which ethical and compliant financial operations are not just encouraged, but legally mandated.
So what does this pervasive regulatory framework, especially the FCA, truly mean for the financial services industry at large? It becomes abundantly clear that the FCA operates as the ultimate guardian, the central nervous system of the entire system. Mr. G explicitly highlights FCA objectives and regulation as a commonly examined area, which immediately signals its absolute centrality, not just for the exam, but for everyday practice. It's not simply another item on a checklist, it is the fundamental foundation upon which all other operations, from product design to client interaction, are meticulously built. Advisors simply must know the FCA's rules inside out because these rules dictate every single aspect, from how financial products are conceived, designed, and marketed to the precise mechanisms for how client complaints are rigorously handled.
This brings us to a really crucial question. Why exactly is the FCA imbued with such profound power and influence? The answer lies in its multifaceted and critical functions. Firstly, they ensure market integrity, vigilantly safeguarding the overall health, stability, and trustworthiness of the financial system. Secondly, and perhaps most directly impacting the individual, they serve as the primary protectors of consumers, working tirelessly to ensure that you, the client, are consistently treated fairly, receive suitable advice tailored to your needs, and are adequately informed. Thirdly, they actively promote healthy competition within the financial sector, which ultimately benefits consumers through fostering innovation, wider product choices, and more competitive pricing. Their approach to supervision isn't just about setting rules and then passively waiting for violations to occur. It involves proactive monitoring, conducting in-depth thematic reviews of industry practices and rigorously enforcing compliance through fines and sanctions when necessary. This proactive and assertive approach is what genuinely builds and maintains public trust in the entire financial system, because you know there's a strong, vigilant body actively overseeing the conduct of both firms and individual advisors.
It genuinely makes you reflect, doesn't it? What would the UK financial world truly resemble without a robust, empowered regulator like the FCA? It would, without doubt, quickly devolve into something akin to the Wild West, rife with pervasive mis-selling, widespread fraud, and a crippling lack of fundamental consumer confidence. Their substantial power directly translates into tangible protection for you, the consumer, by ensuring that financial firms and advisors strictly adhere to a stringent code of conduct. Take, for instance, the foundational concept of treating customers fairly, universally known as TCF, which isn't just a polite suggestion. It's a core FCA principle and a fundamental legal requirement that profoundly underpins all financial advice of operations. It mandates that firms must genuinely consider your needs and best interests at every single stage of your interaction, from the initial design of a product to its marketing, sale, and even through to the after-sales service and complaints process. This principle is so deeply embedded that it permeates the entire industry, making TCF an absolute benchmark for ethical practice that firms are not just encouraged to aspire to, but are legally obliged to stringently follow.
Building on that regulatory framework, topics 20 to 24 delve deeply into the critical aspects of operational compliance. These topics precisely outline the day-to-day operational rules and responsibilities that financial firms and advisors must adhere to. This includes the proper conduct of business, the intricate specifics of credit and lending practices, the absolutely vital anti-money laundering (AML) and know your customer (KYC) procedures, robust data protection protocols, and broader legal compliance requirements that govern every facet of their work. These are the practical guardrails, the indispensable operational pillars that ensure the theoretical regulations we've just discussed are not just understood, but are effectively and consistently put into daily practice.
These really do sound like the essential practical guardrails for daily operations, don't they? It's all about how financial firms and their advisors actually behave and meticulously manage their responsibilities hour to hour. Mr. G places particular emphasis on AML and KYC procedures alongside data protection as particularly key areas. Why are these specific areas so profoundly crucial, not just for the individual advisor, but for maintaining the fundamental integrity of the financial system as a whole? They genuinely seem to command a significant amount of regulatory and practical attention.
What's truly compelling here is that these areas serve as the frontline defense against some of the most serious and pervasive threats to global finance and, crucially, to individual privacy and security. AML and KYC procedures are on the absolute cutting edge against financial crimes, which unfortunately include everything from terrorism financing to organized drug trafficking. They are designed to rigorously ensure that illicit funds, often referred to as dirty money, cannot legitimately enter or move through the formal financial system. This means an advisor must undertake a painstaking and thorough process to verify precisely who their clients are and to meticulously establish the legitimate source of their funds. Data protection, on the other hand, safeguards your incredibly sensitive personal and financial information. In our hyper-connected digital age where data breaches can lead to devastating consequences for individuals, everything from identity theft to significant financial fraud, robust and proactive data protection measures are paramount. Without these stringent, often complex measures and the constant vigilance they demand, the entire financial system's integrity would swiftly crumble, exposing both institutions and countless individuals to unacceptable and significant risks. The erosion of public trust would be immediate and severe.
That truly underscores the relentless vigilance and continuous updated training that is absolutely required for all financial professionals to stay compliant in these incredibly rapidly evolving areas. Financial crime, sadly, doesn't stand still. It constantly adapts and finds new avenues. And neither do the sophisticated cyber threats that target sensitive data. The inherently global nature of both financial crime networks and potential data breaches means that the rules, the best practices, and the technological tools to combat them are in a state of constant evolution. This necessitates an ongoing commitment to education and swift adaptation from every single advisor and financial institution. A seemingly simple KYC check, for instance, might involve the advisor diligently verifying your identity using official documents like your passport or driving license and confirming your residential address with recent utility bills or bank statements. This process, while appearing straightforward, is absolutely critical. It prevents identity fraud, thwarts attempts to use financial services for illicit purposes and protects the integrity of the system. Conversely, the consequences of poor or lax data protection are stark and devastating. We've witnessed numerous instances where major financial institutions have suffered catastrophic customer data compromises, leading to enormous regulatory fines, irreparable reputational damage, and, most importantly, countless individuals facing the immense stress and tangible financial impact of having their personal information maliciously exposed. It's an enormous, non-negotiable responsibility that underpins public trust.
Finally, we reach topic 25, which provides a crucial safety net for consumers and serves as a vital pillar of accountability, complaints, and compensation. This section meticulously addresses what happens when things, despite all the safeguards, inevitably go wrong, providing a clear and established pathway for redress. When we connect this to the broader picture of financial services, this final topic represents the ultimate consumer safeguard, a vital guarantee of recourse. Knowing that there are robust, well-defined systems for lodging complaints and, crucially, for receiving compensation, provides an indispensable layer of trust and accountability within the entire financial services industry. It unequivocally means that if you, as a consumer, are ever mistreated or provided with unsuitable or negligent advice, or even if a financial firm unfortunately fails, there exists a clear, established, and enforceable path to redress. This isn't just about punitive measures for firms. It's fundamentally about restoring consumer faith, reinforcing market integrity, and ensuring that individuals are never left vulnerable or without remedy when navigating a complex financial landscape.
That's a truly powerful and reassuring point. It genuinely speaks to the profound psychological impact of knowing these systems exist, not just for consumers, but importantly for advisors too. For consumers, it offers immense peace of mind, alleviating the anxiety that their hard-earned money and their crucial financial future are not entirely at the mercy of individual firms or isolated incidents. For advisors, it acts as a constant, tangible reminder of the exceptionally high standards of conduct and diligence expected of them. Knowing that a robust complaints process and an effective compensation scheme are in place directly incentivizes firms and their advisors to get it right the very first time, to rigorously treat customers fairly, and to maintain absolute transparency. This is because the professional and financial consequences of failing to do so are unequivocally clear and actionable. The Financial Services Compensation Scheme, or FSCS, stands as a prime, real-world example of precisely such a compensation scheme. It provides vital protection for your money if a financial firm, such as your bank, building society, or investment firm, were to unexpectedly fail. If your institution were to go bust, the FSCS can step in to compensate you up to a certain specified limit. This provides an absolutely critical layer of security that enables you to trust the wider financial system, knowing that a significant portion of your deposits or investments are safeguarded. It is an indispensable component of the UK's sophisticated financial infrastructure. So, having navigated these 25 essential pillars, what does this comprehensive knowledge truly mean for the aspiring financial professional, specifically the mortgage advisor? Mr. G makes it abundantly clear that successfully completing SumMap 1 isn't just about academically memorizing facts or passing a series of exams. It is about meticulously building the legal, ethical, and practical foundations that define the very core of a mortgage advisor's role. You are not simply helping clients select a mortgage product from a list. You are, in essence, becoming a qualified, deeply knowledgeable, and critically a trusted guide through one of the most significant and often emotionally charged financial commitments of their entire lives. This demands a depth of understanding that extends far beyond merely matching interest rates or product features.
What's profoundly compelling here is the unwavering emphasis on ensuring that client interests are always unequivocally protected, that clients are consistently treated with fairness, and that the advice provided is always genuinely suitable, completely transparent, and fully compliant with the stringent regulations set forth by the FCA. This directly and profoundly connects back to the treating customers fairly, TCF principles we explored earlier, which are not just guidelines but are deeply embedded within every layer of FCA regulation. An advisor's job is, at its fundamental core, about building and upholding trust and acting as a fiduciary, meaning they are both legally and ethically bound to act solely in the absolute best interests of their client, even if this might mean a less profitable outcome for themselves or their firm. This raises a critical and ongoing challenge for every advisor. How does one successfully navigate the delicate and often complex balance between legitimate commercial goals, because, let's be pragmatic, this is a business, and the unwavering commitment to genuine client advocacy, ensuring that the client's needs and long-term well-being are always unequivocally prioritized above all else?
It's undeniably a complex tightrope, isn't it? The long-term impact on a client's life when they receive genuinely suitable and ethical advice versus advice that primarily benefits only the advisor or the lender is absolutely profound and far-reaching. Imagine, for example, a scenario where a client, perhaps with a less than perfect credit history or limited financial literacy, is subtly steered towards a subprime loan without fully comprehending the significantly elevated risks involved, the much higher interest rates, or the potential for negative equity in a volatile market. This is precisely where the robust ethical foundation meticulously provided by CeMAP 1 becomes absolutely critical. It's not merely about what is legal, it's about what is unequivocally right for the client. The enduring reputation of the entire financial advice industry, and indeed public confidence in it, rests squarely on these foundational principles of transparency, suitability, and unwavering fairness, ensuring that trust isn't eroded by short-sighted commercial interests.
This is exactly why the CeMAP 1 material transcends mere theoretical knowledge. It functions as a moral compass for the entire profession. It equips aspiring advisors not only with the technical tools to navigate financial products, but, more importantly, with the ethical framework to identify and meticulously mitigate potential conflicts of interest, and to consistently prioritize the client's long-term financial health and security above all else.
Here's where it becomes particularly relevant and insightful for anyone actively preparing for this challenging journey: the exam itself. Mr. G provides us with the precise, practical details, which are always invaluable for effectively focusing your efforts and optimizing your study strategy. The CeMAP 1 exam is structured into two distinct units. Each unit comprises 50 multiple-choice questions. To successfully pass each unit, you must achieve a minimum score of 70%, which translates to correctly answering 35 questions out of 50. This isn't a casual assessment. It demands solid, rigorous preparation and a deep understanding of the subject matter.
This immediately raises an important point. A 70% pass mark is quite significant. It unequivocally indicates a requirement for strong retention of facts and a deep, nuanced understanding of the material, moving far beyond mere surface-level knowledge or simple rote memorization. The multiple-choice format, while seemingly straightforward at first glance, is often designed to test nuanced comprehension and the practical application of principles, rather than just basic recall. Questions might present complex hypothetical scenarios, requiring you to apply a specific regulatory principle, or they might force you to distinguish between closely related concepts, which can be particularly tricky and demanding under the time pressure of exam conditions.
Indeed. And this 70% pass mark itself speaks volumes, doesn't it? What does it imply about the industry's unwavering commitment to ensuring exceptionally high standards for its professionals? It strongly suggests a very clear and deliberate intention to ensure that anyone who successfully qualifies possesses a robust, verifiable, foundational knowledge across the spectrum of UK financial services. While this undeniably places significant pressure on aspiring advisors, it simultaneously provides crucial reassurance to the wider public that those who pass have demonstrably achieved a proven level of competence and a comprehensive understanding of their profound responsibilities. It acts as an essential, high-stakes gatekeeper for a profession that carries such immense financial and ethical responsibility for individuals' lives. Beyond the sheer volume of content, Mr. G also provides incredibly valuable strategic revision advice. He recommends focusing your intensive revision efforts on several commonly examined areas, almost like a meticulously curated cheat sheet for maximum efficiency. These pivotal areas include the critical FCA objectives and their associated regulations, the intricate procedures for anti-money laundering, AML, and Know Your Customer, KYC, the comprehensive advice process and the principle of treating customers fairly, TCF, various types of insurance products, the specific conduct rules governing advisor behavior, the diverse lending types, and finally, the vital compensation schemes designed to protect consumers. It's genuinely insightful how specific he is with these commonly examined areas. It feels almost as though he's directly pointing you to the absolute linchpins of the entire syllabus, the topics that are not just crucial for passing the exam, but are fundamentally critical for ethical, compliant, and truly effective practice in the real world. These aren't just random selections, they represent the absolute bedrock, the core pillars of what it genuinely means to operate safely, responsibly, and competently within the highly regulated financial services industry. Mastering these particular areas is paramount for any aspiring advisor.
Right. When we connect this strategic advice to the broader picture of professional practice, these highlighted areas are not merely testable subjects. They represent the highest potential risk areas for consumers, the very core ethical responsibilities incumbent upon an advisor, and the most frequently encountered high-stakes practical scenarios within the industry. Mastering these precisely means that an aspiring professional is adequately prepared for the most critical aspects of the job. Those situations where a lack of knowledge, a misstep, or a lapse in judgment could lead to serious, tangible consequences for a client, or indeed for the advisor's firm itself. For instance, knowing the SCA's specific conduct rules inside out isn't merely about ticking a box on an exam. It's about actively avoiding severe misconduct charges and consistently ensuring fair, positive client outcomes in complex real-world situations.
And when you think about it, it makes perfect logical sense, doesn't it? Why would these particular areas be so heavily prioritized in an exam specifically designed to qualify advisors for such a sensitive role? They almost certainly represent the points of greatest potential consumer harm or the most frequent instances of regulatory noncompliance. If an advisor doesn't deeply understand AML KYC procedures, they could inadvertently become an unwitting conduit for sophisticated financial crime. If they fail to fully grasp the nuances of TCF, they could easily missell an unsuitable product to a vulnerable client, with potentially devastating long-term consequences. So these are unequivocally the areas where the stakes are highest, impacting both the individual advisor's career trajectory and the fundamental integrity of the entire financial market. An advisor must possess an exceptionally deep understanding of the FCA's conduct rules, for example, to expertly navigate ambiguous situations and rigorously avoid misconduct charges that could jeopardize their entire professional future and severely harm their clients. Beyond focusing on specific content, Mr. G also generously shares his practical revision playbook. He advises future candidates to diligently use the official LIBF practice questions, which are always considered the gold standard for exam preparation as they directly reflect the exam style. He also stresses the importance of thoroughly reading the official textbook, which is essential for building that robust foundational knowledge. And crucially, he recommends regularly taking timed online mock tests. These simulate the actual exam conditions, allowing you to practice time management effectively under pressure. These are truly the classics, the tried and true methods for any serious exam preparation. They build foundational knowledge, reinforce concepts, and test application under pressure, ensuring you're ready for the big day.
But then, Mr. G introduces what he champions as the absolute most important and, frankly, revolutionary strategy: the power of repeated listening to his meticulously crafted podcasts and videos. He posits that this method of repeated audio and video study uniquely strengthens long-term memory. The genius behind this approach lies in its ability to leverage what he calls lost time, those otherwise unproductive moments in your day. Imagine revising complex financial regulations while driving your daily commute, or reinforcing the specific types of insurance products during a jogging session, or even while performing mundane chores at the gym or discreetly during your workday. What's truly fascinating about this emphasis on repeated listening is its direct, demonstrable connection to strengthening long-term memory. This approach masterfully leverages the principles of passive learning and the human brain's remarkable capacity to absorb, process, and crucially, reinforce complex information through consistent auditory channels, even when your primary focus might be on another activity. It's not about the traditional, active, and often exhausting process of sitting down with flashcards or textbooks for hours on end. Instead, it's about immersing yourself in the content, allowing it to subtly seep into your subconscious and gradually solidify over an extended period. This raises an incredibly pertinent question, especially for busy professionals. Can this innovative method genuinely transform seemingly lost or unproductive pockets of time into profoundly productive learning opportunities, effectively doubling or even tripling your effective study hours without demanding any additional dedicated desk time?
This unique strategy speaks directly to the learner persona we aim to serve, someone who craves acquiring deep, thorough knowledge quickly and critically without feeling completely overwhelmed by information overload. Picture this: someone on their daily commute effortlessly absorbing intricate financial regulations, or an individual at the gym reinforcing the subtle distinctions between different insurance products, transforming what would otherwise be unproductive time into a dynamic, personalized learning laboratory. This not only allows for significant progress on exceptionally demanding subject matter, but does so without requiring the learner to carve out additional, often elusive, precious blocks of dedicated study time. This approach could genuinely serve as a powerful blueprint for learning in other highly regulated or demanding professional fields, effectively democratizing access to complex knowledge and making it achievable for even the busiest professionals or those with extremely limited traditional study hours. It's a truly revolutionary way to rethink how we approach continuous professional development. So we've meticulously unpacked the vast and vital world of CeMAP 1, dissecting it from the broad strokes of the UK financial environment and its global influences, down to the intricate details of consumer protection mechanisms and the profound ethical responsibilities that underpin the role of a trusted mortgage advisor. We even explored Mr. G's truly intriguing and innovative take on leveraging lost time for deep, repeated learning, offering a groundbreaking approach to mastering complex material efficiently.
Mr. G's concluding message to his students is not just motivational. It's profoundly powerful and resonates deeply with anyone embarking on a challenging learning journey. You can do this. Thousands have. So will you. Stay consistent. Believe in yourself. It serves as a potent reminder that behind every complex professional qualification lies a deeply human journey of dedication, persistence, and often sheer grit. It underscores that while the material itself is undoubtedly challenging, the path to success is well-trodden, and achieving it is unequivocally within reach through consistent, focused effort.
And he powerfully stresses that passing CeMAP 1 is far more than just an academic achievement. It's a monumental, indispensable step toward becoming not just a qualified, but crucially, a trusted mortgage advisor. That single word, trusted, carries an immense amount of weight and significance in the financial world. It encapsulates responsibility, integrity, and the very foundation of client relationships.
Considering the profound level of trust that is inherently placed in financial advisors, and Mr. G's consistent emphasis on acquiring a comprehensive foundational knowledge base, what does it truly signify to be trusted in a contemporary world characterized by increasingly complex financial products and an ever-changing labyrinth of regulations? And extending this further, how might this innovative emphasis on continuous, deeply integrated learning, particularly through methods like repeated listening and leveraging lost time, fundamentally shape the future trajectory of professional development and ongoing competence in highly regulated industries, demanding not just superficial knowledge acquisition, but a deep ingrained understanding and unwavering ethical application?